Jamie, here we are back again. We're going to be talking about what kind of investments can be in a Liechtenstein or Swiss bank account. So maybe you could kind of start off with a bat, just I'd say the ground level basics of what is going to be invested in a Swiss bank account.
Yeah, absolutely. I mean, from a regulatory standpoint, you can more or less invest the same things that you could within the US. So there's no restrictions on what you can invest in, especially when we talk about publicly traded investments like stocks, bonds, precious metals, foreign currencies, and depending on the institute, also cryptocurrencies. So that's all not going to be a problem at all. There are some restrictions in terms of like products that are being issued. There it always makes sense to talk to a registered investment advisor that has expertise and experience when it comes to offshore wealth management, that to make sure that you will not have any negative tax like consequences when you invest into products. But when it goes to direct investments or any US issued products, then you don't have any limitations at all.
Yeah, and I think that especially the point about non-US listed products is something that's very good to bring up, because there's a lot of regulation around them, what Americans can and cannot invest in, and how even those funds can be made available to non or US investors. But usually in our line of business, we say it's a little bit of a red flag if an investment advisor is talking about putting a mutual fund or a non-SEC registered investment product in your portfolio due to the reporting requirements. It's one of those things where even if the investment itself has the right documentations for you, your tax bill on the back end for the reporting requirements could increase incredibly because of everything that goes in to make sure it's reported correctly. And there's some serious fines if not reported correctly.
I mean, we are not tax advisors.
Correct.
So we always advise that
Correct.
you talk to a tax advisor, CPA, or tax attorney that has a thorough understanding of cross-border investments. For our company, for WHVP, we stay clear of European products or
Absolutely.
any other products outside of the US for the reasons that you have mentioned. I think one other aspect other than like the regulatory restrictions in terms of what you can invest in is just a strategic focus.
Yeah.
And this is also like, I guess, subjective, but for our firm, for WHVP, we typically stay clear of the US market unless our client explicitly asks for it. And the reason for that is not that we are restricted or not allowed to go in the US market, but simply that most of the people that we work together with, they have the vast majority of their assets in the US. They earn and save and spend and think in US dollars. So it makes little sense to appoint a wealth manager across the globe to then go back into the US market. But that's not because you are not allowed to invest in the US market, but rather because we believe it makes sense for us to focus on a geographical area that we know best or we have most experience and expertise in. And that is something that you can get much less easily from within the US. So we try to offer something that's complementary from what you can get from your US advisor. Doesn't mean it's not possible or not allowed to go into the US market. It's just for us, it doesn't really make a lot of strategic sense.
Yeah, absolutely. I think that's a good point. I think the only question maybe that would come up that we haven't specifically spoken about is like vaults for precious metals. The banks we work with have vaults. So if you want to buy physical precious metal and hold it, that is also possible, not just kind of the paper ounces that could be traded, but the physical precious metals itself. That comes up occasionally, not all the time, but something that also is possible in a Swiss or Liechtenstein investment bank.
Yeah, absolutely. And on that end also, having various like foreign currency accounts is something that's a standard that we have for all of our clients with all of the banks that we work together with. Here in Switzerland, it's very common to just have various foreign currency accounts. You will get that just as part of having your offshore portfolio, and it will be a lot easier and also more cost efficient to make foreign exchange trades between currencies compared to what you might be used to in the US.
Yeah, absolutely. And I think one final point that I might put on is often gets asked as well as what are the interest rates on the accounts that we have. there are no interest rates on the accounts. Where you can, have a type of CD investments or money market investments to earn interest on cash. These are investment bank accounts. The banks are private banks. They're not out there trying to use your money, get you a free bank account and put an interest rate on it and make you hold or incentivize you to hold it in cash. So that's one thing that sometimes Americans don't fully grasp, that if you send cash, if it's sitting in cash, it's just going to earn interest.
But it is possible to make investments into like CDs, for example,
Absolutely.
treasury bills if you want
Correct.
that. It is possible to do that. And maybe one final point from my side. It is also possible, depending on the bank, to get a debit or credit card on the account. So if you're someone who travels in Europe frequently or maybe even lives in Europe and you're looking to have like a euro credit card like tied to your euro account or like a credit card tied to your Swiss franc account, that is something that we can also look at on a case-by-case basis.
Yep, absolutely. Thanks, Jamie.